Why does the statement of net worth matter so much when it comes to buying a business, especially if you are getting either a commercial loan or an SBA loan? Well, in today's video, we're going to find out what role does your statement of net worth play when buying a business. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy or sell a profitable business. If you are a small business owner looking to increase your wealth by purchasing an already profitable business, or if you are a W-2 executive working the 9 to 5 but trapped on the rat race and want to buy a profitable business, there you are in the right place. Please subscribe to my channel. Don't forget to hit the bell and you'll be notified every Thursday when a new video comes out. A couple of weeks ago, I did a video, probably about 25 minutes long, on a whiteboard that is right behind me, and where I covered a great deal. And that video was titled How to Buy a Business with the Best Case Scenario. If you haven't watched the video, I want you to go and watch it. The link will be up here and down below. It was published on October 27. Then there's another video that I did when actually going into great detail on the actual left side, right side, debits and credits of your personal statement, your net worth and your balance sheet, but more like the intricacies of which I actually shot over my computer. And I want you to watch that video as well because it will go hand in hand with this one. That was released on A4. The link will be up here and down below. The reason why I have this whiteboard behind me is to talk about your statement of net worth, which is critically important. And what we're going to find out is what role does it play in you buying a business. First and foremost, let's discuss what statement of net worth is and what the formula is. In simple terms, net worth equals your total assets minus your total liabilities at a personal level. So the aggregate of everything you own minus everything you owe to somebody else is going to spell out your net worth. Now, when your total assets are more than your total liabilities, you're going to have a positive net worth. When your total assets are less than your total liabilities, you're going to have a negative net worth. Let me give you a specific example. If all you own is a home, and that home you bought it for $500,000 2 years ago, and that home is worth $300,000, it went down to $100,000, but you have a $400,000 mortgage on the same home that is now underwater, you have a negative net worth. So what role does it play? It's basically the ace in the hole when it comes to financing the purchase of a business. Let me tell you why, specifically. So let's say you have a deal that is good, not great on cash flow. It will service the debt of 1.25 or better. Your FICO is not 650, 750, it may be 690 with barely 1.25 debt service coverage ratio. You have okay management experience, which is another requirement for a lender, but then you have a strong $1 million plus net worth. It would be the difference between you getting a loan or maybe not getting a loan. So you see, the way it works is that net worth is sort of the add-on, is the wild card in buying a business. Now, if your net worth is negative or if you have zero net worth, you have no business buying a business. If you have subscribed to my channel, you know that I am all about helping business buyers buy a business where they have the management experience, the great credit, basically to minimize the risk from a lender. The lender is there to help you. They're not against you. They want to finance the purchase, but you have to be able to stand on your own 2 feet and be able to successfully run a business. It's not just buying the business, it's being able to buy the business from where it is today, take it to as far as it can go. In fact, the whole goal when you're buying a business is to double it in value. So if you bought a business for $1 million, you want to make it worth $2 million. And guess what? If you bought a business for $1 million and you financed it with a $900,000 loan and you have X amount of dollars that you have to pay every month for 10 years, and if you double your profit, it will quadruple the coverage of your debt service. It's a win for all. The bank is happy, you'll be very happy, and the business will be thriving. It's a win for me because you have a business, you become a great testimonial. So my job is really to help you assess what are your chances of succeeding on a business. And I look at your statement of net worth very, very carefully. So we already established what net worth is. Now, so to me, the way I describe net worth is it's basically a measurement of success. The higher your net worth, the more successful you are. Now, it's kind of like your FICO score when assessing your credit worthiness. It's amazing to me what one number will do to somebody qualifying for a loan. You know, if your FICO is 750 and I knew nothing else about you, and somebody else walked in with a FICO of 650, what do you think I would think? There's a 100-point gap between the two people. I would think, without knowing anything about you, that the one with 750, it's better. It's better at what? Managing their credit worthiness. So if you have somebody with $1 million net worth and somebody with a $500,000 net worth, I automatically think that the one with the $1 million net worth has more success. That doesn't tell me anything else. It's just a data point and all the data points that I'm going to collect. So your statement of net worth is a data point that tells me a whole lot. It tells me that your measurement of success, that how well you're able to build assets, how you're able to buy things right and they appreciate in value, and versus the debt that you used to buy those assets. Now, if you ever read the Robert Kiyosaki Rich Dad, Poor Dad, which I'm a big fan of, it tells you how to actually build your balance sheet. And truly, if you're building your net worth, if you buy a house and if no money is coming into it and all the money is going out, well, do you have an asset or a liability? It's a matter of perspective. If you buy a house and you turn it into a rental, if you have a house and you turn it into an Airbnb and your mortgage is $2,000 and you bring in $5,000, all of a sudden that is a $3,000 cash per month cash flow deal on an asset. Hey, do you need help in me coaching you alone for either buying or selling a business? We'd love to help you. All you need to do is drop me a comment below or send me an email. My email address is in the description of this video down below. Let's work together. It goes from being a liability to being an asset. So the same is when you're analyzing your statement of net worth, I'm interested in knowing what you do and how you do it. Like if you have, the one thing that you need to know about the statement of net worth is not only does it talk about your assets and your liabilities equals your net worth, assets minus liabilities equals your net worth. You're going to see it on the right, in the middle of the form 413, you're going to see that it's very evident what your net worth is. That number is very important. But what lenders would also do, they would actually have you list all your personal P&L, your personal profit and loss. We want to know how much you make, your gross. We want to know how much you're netting, post taxes, and we want to know what your expenses are on a monthly basis. And at the end, we're going to see your positive cash flow on yourself. So if you're able to manage your positive cash flow and you say you're making great money and you're able to save $10,000 a month, I would expect that you'll be able to save some of that money and buy one property, buy another property, invest in stocks. If you're very successful, because success begets success. So as you start to become successful and somebody may say, hey, can you partner up with me on this deal? I give you 30% equity on this company I'm about to start. So you invest yourself into this company and this business goes from 0 to $1 million and the valuation goes from 0 to $1 million. And then you own 30% of this LLC. When we're building your statement of net worth, that 30% equity stake is worth $300,000. The quickest way to go from 0 to net worth is either get equity or consult for equity on a situation in which you actually gain equity on a privately held company, or you buy a house. For those of you who bought a house in 2020 or 2019, millions have been made by people who bought properties during COVID, right before the interest rates went up. I'm grateful that I was able to put myself in situations that I was able to acquire a couple of properties and thus building my own net worth. It's really understanding the market, understanding risk, and understanding interest rates. So the quickest way to build your net worth is to either get equity on another company by consulting, so it doesn't cost you anything, or actually you buy a property, you buy it right and let it appreciate in value. You're going to have a fixed rate mortgage on an ever increasing value asset. So while your mortgage continues to go down eventually, your equity will continue to go up and the gap is your net worth. So back to, what was the original premise of this video? Is what does your statement of net worth matter so much with buying a business? Now, I hope you understand by now that it's a data point, but it gives me a measure a key performance indicator on you. So if your net worth is 0 or negative, you're not going to be able to get a loan. Now, I have situations, cases in which people come to me, they may even have saved up enough, they may even have $200,000 in the bank, enough for a 10% down on a $2 million business purchase, but they have nothing left after they give that money as a down payment. Then what? The lender will look at that as too risky. You have no working capital. If something goes wrong, which by the way, I should say, the way an SBA lender or a non-SBA lender looks at it, we assess your net worth to find out if the worst things happens, if the economy turns, we're in a period of inflation right now. If something bad happens, can I tap into the buyer? Can you tap into your own resources, be able to take some money out of you and invest it in the business? For instance, if you have equity on a house, can you get a HELOC and pull $50,000 if you need it to meet payroll? Now, the joke is that you've never really been a business owner unless you have to sweat a payroll. Now, having owned several businesses myself, I know that you never know when you're gonna need money, because when you need it, it's too late. You never go to a bank when you need money, because when you need it, it's too late. So the statement of net worth is where you tap that pool, that reservoir of assets and readily convertible to cash that you can use to kick into the business. Because we want to know that you have reserves, that you can tap into your reserves should something happen. So your FICO, your credit, as we're evaluating you, we're looking at you as your credit worthiness. We're looking at your management experience. We're looking at your net worth to be able to help the collateral piece. Just like we're looking at the business, the target business, and we're looking at the cash flow that comes from the business. It's an all-inclusive. It's not one thing at the exclusion of other. So you have to realize that when you're buying a business, what you're buying is a very fragile ecosystem. That the bottom line of that is, if you do things right, with the right experience, with the right capitalization of your business, you're gonna be able to produce cash flow. And that cash flow can be amazing. I've seen businesses where the cash flow is to the tune of $100,000 a month. I've seen businesses with balance sheets that have $2 million in cash. But knowing how to buy and knowing how to perfect the balance sheet is what the know-how is. So hopefully this video was helpful to you guys. Please, if you need me to help you with buying a business, I am here to guide you along with the process, because I'm fascinated. I want more and more people to be able to own their own business. Don't start a business, buy a business. Thank you for watching. For a limited time, I'm giving away my cash flow calculator, a great, nice little Excel tool that I use every week when I'm actually calculating cash flow and trying to put a loan to buy a business. It's a great tool as you're evaluating any business. All you have to do to get it is click on the link below and it'll be yours to keep. Thank you so much.